almost 41% in first half year-on-year basis. Of course, our revenue is down, and that's mainly because of lower average selling prices, and that is a function of global prices, and that is of course not beyond our control. Next is in terms of quarterly performance. So we have shown here that how our Q1 has trended in 2018, 19, and 20, and similarly Q2 in 2018, 19, and 20. And you will notice that in 2020, for 2 successive quarters, we have delivered very strong volume growth. And then moving into the next slide, as far as what has been driving this volume growth, of course, we have this improvement across all our 3 key segments. The way we look at this business is that we have a mining sector, then we have the general markets, which includes generally most of the industries and some services. And then finally, of course, we have the retail business. So in Q2, of course, and both Q1, we have seen strong performance growth coming from the mining sector and general industry. In Q2, of course, on quarter-on-quarter basis, we had a slight decline from the mining side, but our general industry has picked up in second quarter. And you will also notice that our retail business is also now picked up, and that's because also we have resumed the delivery of subsidized diesel, as well as we are also now, our BP has a relatively higher volume growth year-on-year basis, as we will display in later slide. This is, of course, the BP performance. I think, as you may have all noticed, that almost everybody is having this trend globally, or rather in Indonesia, that they all had a decline in April, and then they had a big rebound coming into June. So you will see the similar monthly trend for our BP business, that it was till February we were delivering a very strong month-on-month growth. Then we had a sharp decline starting from second half of March. It troughed in April, and since June, and then of course it has rebounded. And based on the latest number for July, we are almost about 80% of our performance that we were delivering in February. So things are going as per our expectations here. Then coming to the chemical business, yes, this business is probably the one that has been more affected by what has been happening in the environment. We have been affected both by volume, and that's mainly because of social distancing, as well as pricing, and that is again a function of lower oil prices, as well as general slowdown globally. So chemical business is the one where in second quarter, we had a decline both in terms of volume and as well as in the average selling price. So that has affected our profitability overall of our trading and distribution business. This graph shows you the chemical trends that what we have seen so far. As I mentioned, that it has been affected both by volume and prices. If you look at the data, internally, the decline is coming from few industries. I will just highlight that the industries which have performed relatively better are the smelter sector, food, palm oil, and general plantation. Those are the 4 sectors that have been performing relatively more better, whereas the rest of the sectors, that's predominantly manufacturing and other sectors, they have been relatively more affected due to the social distancing. We are seeing improvement in our June volume, so we are hoping that if things sort of stabilize overall, then we will see volume in Q3 coming back to about 350,000 metric tons that we have been seeing over in Q3 in the last 2 years. Average selling price, I think all of you are well aware how the oil prices were troughing in the second quarter. So that is reflected in our average selling prices for petroleum volume as well as chemicals. And the graph below is the MOPS HSD, which is the benchmark for us. So you'll see that actually the MOPS price are almost half of what they were in Q2 2020. So the next slide is again something that we had always been discussing with all of you, that our margins are more driven by rupiah per liter than based on a percentage of selling price. And again, what you will notice in this chart, the orange line is that there's a big spike in our gross margin for trading and distribution businesses, going up to almost 11% from 7% in previous quarter. So again, this validates what we have been saying, that please look at our margins, especially for petroleum, on rupiah per liter basis and not as a percentage of oil prices. Logistics and manufacturing, I think these are the businesses that definitely support our bottom line. So both of these businesses are showing pretty strong growth. Logistics in the first half is up almost double the profit, and that's partly because we had a strong volume in the first quarter, and we have been very sort of disciplined in managing the cost. So that has doubled the gross profit for logistics. Manufacturing, again, what is something similar to what we see in the petroleum business, that because of the lower selling prices, our revenue goes down, but the lower prices also affect our raw material prices. So overall, actually, our gross profit is up 20% in the first half year-on-year basis, and that's mainly because the margins were more in favor of us because of the lower oil prices in this business. Slide number 15 is the industrial state, and at least in the first half and as well as in the second quarter, we have been delivering what we have been sort of guiding in the last few months, that overall in this year we have had almost 9 hectares of sale, and then of course we are also getting the lease income from Freeport. So as this business is delivering as per our expectations so far. Then I'll come to the operating expenses. Of course, I think for you and for I think most of the businesses in Indonesia, this is a very critical, especially if there are a lot of have pressure on their revenue or on the gross profit. So we have been relatively disciplined as far as our operating expenses are concerned. Our general and admin expenses are up 9%, and our selling expenses are actually down 17%. So overall, we have about 5 to 6% growth in this business, in this particular area. And as Pak Haryanto will probably mention also, and if you have any question, that how we are maintaining our discipline in terms of our employees, in terms of our marketing expenses, and generally overall our expense base here. A balance sheet, again, we have a slight decline in assets and equity. I mean, assets for AKR is, of course, a large portion of our asset is the accounts receivable and accounts payable, and those two are a function of the oil prices. So because of the lower oil prices, automatically our trade receivables and our accounts payable are down, and that has reduced our asset base. Otherwise, if you look at the industrial state land inventory as well as our net fixed assets, they are still remain relatively stable. Our equity in the second quarter is slightly lower, mainly because we had a payout of our final dividend for year 2019. So that is marginally affected our equity. Year to date it's up, but quarter on quarter it's down marginally because of almost about 200 billion of dividends that we paid on June 3rd. Cash flow statement, I think some of you have this question on cash flow. So we have a very seasonal cash flow in the sense that our accounts payable and accounts receivable tend to be at a higher level in December. That is because we keep a lot of inventory at that level for the peak season. The middle of the year, generally we have a lower payables, and that is why the operating cash flow, the way we calculate it mechanically, of course, gives you a very a sort of not that positive figure, but you will notice that in the first half of 2018 and 19 also we had a relatively negative operating cash flow, but we ended the year with a positive cash flow. This year, of course, we have a marginally positive cash flow in first half. And the other 2 points I would like to highlight here is that you will see that now we have a lower capex, both in terms of land acquisition as well as in terms of fixed assets. This is again something that we have been sharing over the last few months, that we have done most of our capex in the last 2-3 years. So now the pressure on our cash flow as far as our capex is concerned is much lower this year, and that is what is helping us to maintain our dividend payout ratio. I think receivables is again a big topic for I think a lot of companies. So again, here we are relatively comfortable. Our days receivable has gone down, and our management has been very particular in terms of giving credit to our customers. As you know that in this environment, it's very easy to grow business by easing the credit terms, but this is something that we have been avoiding, and that is why our days receivable remains relatively under control till June 2020. This slide gives you some of the key ratios in terms of like what is our return on asset, return on equity, and net gearing. Our net gearing is about 36%, so well below the internal target we have of 50%. And most of our ratios remain relatively comfortable. And building on the same ratios, what you will notice is that now we have an ROE of about 10+%, and our net gearing is below 40%. And again, the graph that we share with everybody, that in terms of our asset base, a big portion of our asset, almost about 31% is the land inventory, and another 21% is net fixed assets. And on the funding side, only 27% of our assets are funded through interest paying debt. So, and 55% is funded through our equity and equity of our JV partners. So relatively stable as far as our return on equity in the right direction, and net debt to equity relatively under control. So I'll now stop here. I think probably we will run a video of Pak HARYANTO that will also give you a big overview and also share some guidance for future. And then I will share, Pak HARYANTO will also share some recent developments that will definitely be of interest to you. So over to you, Fiana. Pak HARYANTO, thank you for spending your time to discuss AKR Corporindo second quarter 2020 performance. The company has delivered very strong performance despite a very challenging environment. What were the key drivers behind this performance?
Yes, our team has worked very hard to maintain our earning growth momentum in these challenging times. Three key drivers of our earning are: number one, our trading and distribution business had 2 consecutive quarters of volume growth year on year. As you remember, we have been delivering high growth since fourth quarter 2019. We have been focusing on market segment where we have comparative advantages, particularly in comparison to the smaller players. Our trading and distribution are serving basic industry that have more resilient in these challenging times. Secondly, our regular contribution from Java Integrated Industrial and Port Estate has been good. This is coming from both land sales as well as lease income. And thirdly, our strict control over our operating expenses and our improved efficiency are contributing to our profit growth. I would like to add here that our performance should dispel concern about the impact of oil prices. We have stated in many forums and occasions that our business model are based on a pass-through formula of oil prices and foreign exchange rate. This way, we do not take any stock position on the volatility of the oil prices.
Can you please highlight which business segments were relatively more affected by social distancing and the negative GDP growth?
Both chemicals and retail distribution were impacted by the shutdown of factories and social distancing. However, both have reported strong pickup in the month of June, and we expect this recovery to continue into quarter 3 2020. Our joint venture with BP is now moving into the next phase of opening dealers-owned retail site. Inevitably, I believe negotiation with interested parties has been delayed because of this COVID-19. But we expect this to resume again in quarter 3 2020. A social distancing is being eased gradually. We are in the process of finalizing agreement with PT Freeport Indonesia for utilities and other services.
And my third and final question is, what is your outlook for second half 2020, and specifically which key risk factors that the management is monitoring more closely?
We will do our best to maintain the current volume growth momentum. Recent increase in farming quota by about 45% will support this effort. We are monitoring the news about potential cut in Indonesia of coal production and also the development of COVID-19 infection rate. But since we have been able to achieve a significant milestone in the first half of this year, we hope to be able to achieve our year-end target also. Chemical prices are expected to stabilize with higher oil prices. Thus, this is also supporting our gross profit growth. For GP, we are still expecting another land sales of another 10 to 15 hectares in quarter 3 2020. We remain vigilant on credit quality of our customers. We will not compromise on this risk for the volume growth. Operating expenses are being monitored and controlled tightly. We have no hiring at this moment, unless it is for critical position. And we have limited our travel as well as our marketing expenses. I would like to add here that our current performance is a testament to a stable and proven business model. Also, our product portfolio are comprising of essential products that are needed even in these challenging times. Also, our wide geographical presence in Indonesia, supported by the strong logistic infrastructure, give us a competitive advantage. And lastly, our hard work and experience of our management and employees to produce a strong performance is proven. This gives me confidence that we will maintain our business target and return on equity, both in near term as well as in medium term. I may want to add one more good news that our company has received a certification in ISO for the trading and distribution business of petroleum. This again shows our strong and our good teamwork of our management and our employees.
Thank you for giving time and giving us such a broad overview on AKR performance in first half 2020, and best of luck for second half 2020.
Thank you very much.
Thank you, Fiona. Now I think we open it for Q&A, or I'll ask Pak Haryanto to share a few recent developments.
Good morning, ladies and gentlemen. Selamat pagi, teman-teman semua. Terima kasih telah mengikuti acara Investors Call pagi hari ini. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Today, I would like to announce that we have a good news that we have announced 50 rupiah per share interim dividend that will be paid on the 13th of August, and for the cum dividend on the 4th of August, and ex-dividend on the 5th of August. And the second good news that I would like to announce that we still have increasing profit growth and volume growth despite this challenging time of COVID-19. The reason is because, as I mentioned, that our business is a pass-through formula. We don't take a risk on the volatility of the oil price as well as the exchange rate. And not only we look at the percentage of the margin, but we also look at the profitability of rupiah per liter. This gives us a stability in our business. And then thirdly, the good news is that, we have received the ISO 9001:2015 for our petroleum business, both in the headquarters as well as in all our branches. This is also to show the solid teamwork between the AKR management and employee, and also to show our transparency and our good corporate governance in our operation. And then number 4, the sales of GP has been good, and we expect the same in Q3. We are finalizing with one customer also that we hope we can book also in the third quarter. That will use probably between 10 to 15 hectares. And then the 5th is that, despite the slowdown, in the coal industry and also the COVID infection, we are now also looking at other mining industry that are still doing quite well, for example, like nickel and coal. And currently, we are also negotiating with one large customer in a very advanced stage. So hopefully, we can start supplying this customer also from September this year. And then number 6, we have also chemical prices that are stabilized. And, you know, with the easing of the PSBB, we have seen some of our large customers are starting to pick up in their production, which means that going forward, we hope and we believe that the volume of our chemicals will also increase. And lastly, number 7, you know, that we are still confident that despite this challenging time, we should be able to meet our business plan in 2020 because we have achieved a significant milestone in the first half. And in the second half, we have seen many indications that our business should be stable and should be still managed to grow in the second half. And perhaps I want to also share with you that the negotiation with PT Freeport already starting again. They have already, some of their expatriates have come back to Indonesia, and now we are continuing our discussion. So we hope everything to be wrapped up by end of this year. Thank you, and I will like to open to the question and answer.
Fiona, do we have any question on the chat?
Yeah. We still don't have a question, but let me just add one point here. As was shown in the chart briefly, as of July, we also repaid the bond which matured on in July of 895 billion rupiah. This amount was funded from internal cash sources and also from from borrowings from banks on terms of interest which were equivalent or better than the bond coupon that was being paid. So at this point in time, as what I've seen, the net debt equity ratio is at 0.37 times, very healthy situation. And most of the loans, except for in Jakarta Tank Terminal, are denominated in US in IDR, and the company is also arranged all the hedging accordingly. I think we have a question here from Patrick. Despite positive EPS numbers, cash flow remains weak and the net debt is increased. Please talk about cash flow and corporate thinking here. So as I mentioned to you, the net debt equity ratio is at 0.37 times net gearing. In terms of cash flow, the company has reported a good EBITDA for the first 6 months. In terms of the cash flow statement, as Salman explained, this is a factor regarding the payments of letter of credits which fall due. As you know, the oil prices started to decline from March onwards. So payments made in the month of April, May, because we have a credit period of nearly 90 days, would be reflecting those supplies which are at higher oil prices. But overall, if you see the cash flow generation in terms of EBITDA, we are on target in terms of the EBITDA purposes. In terms of the overall cash, we still maintain a net cash balance of 1.3 trillion rupiah at the end of June 2020, which is more than adequate to cover our internal cash requirements. We have reduced the capex spends at this point in time, so the actual outflow of cash for capex will be lower during the third quarter too. Haryanto mentioned about the BP joint venture. We are in the process of already discussing with dealers, and we have had some good leads coming in. So I think the dealer model will also enable us to fund most of the expansion in retail using a dealership and franchise money. Overall, if you see, yes, the expenses are also under control. So there is no big issue in terms of the cash flow at this point in time. Most importantly, Haryanto has always been pushing management to look at receivables and also credit control. So this is a very important part of our business. We don't want to sacrifice, the credit worthiness of customers in the hope of getting more volumes. Thank you. I have another question from Hanel Topada. Hello, congrats. Do you have an opportunity to gain 1 minute? you have an opportunity to gain benefit in terms of margin per liter for distribution business from lower oil price environment and better logistics efficiency due to improving infrastructure in Indonesia. Maybe Pak Haryanto would like to take this question.
Yes. So basically, as I mentioned, we do not take position on the price of oil. So even when the oil price is low, we always buy based on the MOP formula. And what we discuss with them is only the discount from MOPs. So we don't buy the stock to stock up the oil, because then it would be against our business pass-through formula principle. So that's the reason why even the price of oil is low, we don't take any position. But because of the oversupply, we can negotiate a better discount to the MOP price rather than we pay a premium. So I think in a way that would help to improve our margin without taking any risk in the volatility of the oil price. So we are very disciplined in this matter.
There is a thing regarding the better logistics efficiency. As you would have seen in the presentation, our logistics income during the first 6 months of 2020 was better than the logistics income in the previous period. This is from a higher occupancy in our Jakarta tank terminal and also higher income from the shipping and transportation business. Okay, now moving to the next question from Marisa Vijayanto. How is the power plant agreement and scheme with Freeport and other tenants? If using gas, will it lead to higher electricity rates? The question on power plant agreement, Pak Haryanto.
Okay, so basically we are still discussing with the Freeport. I think we hope everything should be completed before the end of this year. But it is the request of Freeport to use a gas-fired power plant because they have some a target in terms of emission to meet. So that's the reason why it's the gas. But we can always, as you know, the government are also talking about how to reduce the price of gas domestically. And we hope that in the future, our gas can be from a domestic supplier, where, from like BP in Tangguh or from other sources within Indonesia, or we can also import LNG in the future in order to have a possible mix of a lower price. And number 3, we are also asking the government whether, as a private power plant, without selling through PLN, whether we can also get the price of a $6 gas or not. This is also in the process. So there are 3 alternatives of supply that we are looking in order to have a competitive electricity price for Freeport and also for our other tenants. Yeah. Thank you.
So I have a question here from Ari from Macquarie. I would like to have Pak Haryanto's view on your latest thoughts on coal production trend and how uptick from new clients such as nickel, gold may affect overall industrial petroleum volume in the second half of 2020. Further color would be great.
Okay. So I think number 1, regarding the coal, yes, we are looking at possibility of coal production volume being reduced in the second half of this year. We are aware of that, maybe 10 to 15% volume reduction. But on the other hand, we are also looking at nickel. I think nickel is doing very well, and we have seen some upside on our nickel customers, as well as in the gold mining, because gold price is also good. So we are also looking at uptick in the consumption of our gold customers. And number 3, now we are also looking at a large customers that are not in the mining, but I could not reveal yet because we are already in the advanced stage of negotiation. That will be quite a large customer also. So hopefully in the next 1 month, we can find some sort of conclusion to start supplying in September this year. So we are looking at the various options. And then number 4, also our retail volume, our BP joint venture, in the month of July, we have seen that we are already back to 70%, more than 70% of our pre-COVID volume. So we hope that, you know, as the easing of the PSBB, this will also increase the volume of sales. And as Pak Salman mentioned earlier, that we are also now looking to open more petrol stations using dealer owned and dealer operated petrol station. So again, these are all will help us in maintaining our volume target for 2020.
Okay. Now I have a question from Sumit Samant. What are going to be the key challenges for second half of 2020 for distribution business and GPay? I think Sumit, that Pak Haryanto has explained in detail regarding the challenges on COVID and also the opportunities in terms of the coal mining business. In terms of the BP JV volume, as just Pak Haryanto mentioned, the volumes of the petrol stations of BP in Jakarta and Surabaya have already reached about 70 to 75% of the volumes in February. So the volumes are picking up. The market share, it still is a very small market share, just with only 15 stations. But including the 135 stations of AKR and BP are together the largest retail after Pertamina. So basically, we have a clarification request from Hanel about the logistics cost itself, not about the revenue side. In terms of logistics costs, the cost of logistics in the case of AKR primarily is included in the cost of goods sold for the terminals that are operated by AKR. In the case of the cost of delivering the products, whether it is chemicals or petroleum to the end customer, Pahanel, that is charged over and above the product price. So that's why basically whatever is the fuel price increases or decreases, we also adjust sometimes in the cost of the logistics cost that we charge to our customers. And yes, we do work in terms of the cost side of it to make it more efficient. So this is an element which is included as part of the trading and distribution. What you see in the logistics revenue and profit is third-party logistics income, like the Jakarta tank terminal, transportations, and others. Okay. So there is a question from Linda regarding the marketing sales in July month to date. Any prospective leads and full year forecast guidance? I think Pak Haryanto, would you like to give some color on this part regarding the July or maybe the Q3 guidance for marketing?
Yeah. I think in the Q3 and Q4, I think we still believe and confident that we should be able to meet our target of 2.3 million kiloliter this year.
Okay. So we have Pa Ryan. Please go ahead and raise your, ask a question, Pa Ryan. Can Fiona unmute Ryan?
Ready, Pak.
Pa Ryan, can you go ahead with your question? If Pa Ryan is not ready, can Pa William
I think
raise his
Pak William,
question?
Pak William.
Yeah, hi. Hi, Pak Haryanto, Suresh, and Salman. Thanks for the presentation and congratulations for the second Q20 performance. And I got two questions here. First, back to the cash flow. So I just wondering whether the company is really comfortable with current cash flow situations. We understand we don't see any pressure on the working capital at the moment, but seems like the expenses related to land acquisition, development, and other expenses seems too high, and how the company's strategy to cope with this. And the second question is related to the Freeport smelter development, how it's progressing so far. Is that affected by the PSBB or the social distancing from COVID-19 pandemics? And any change in the completion timeline and lease term because of this? As we understand, maybe some kind of the force majeure clause is hotly debated in the among the businesses. So yeah, it would be great if you can give us some color on this. Thank you.
So I think maybe the first question, we are still confident with our cash flow because as we have already paid our higher oil price in the first quarter this year, it means that, going forward, our cash flow should be improved because then our LC would be a normal current price. So there will be no higher outlay for paying the usance LC. And then number two, also as part of the government incentive to the industry, we are informed that the Minister of Finance will disburse the subsidy in a faster way, to help both us and also the other BUMN that will receive the subsidy from the government. So this will also improve our cash flow. And then also the second question regarding the Freeport, we are still very intense negotiation because now some of the expatriate already come back to Indonesia to continue the discussion with us. And so far, I think what we were informed by Freeport that the government have refused their request for the delay. So as far as what we are discussing now is that still that the Freeport will be needing the electricity starting from August 2023. So August 2023, I think they need like 40 megawatt. Then in October, another 40 megawatt. In December, another 40 megawatt. And then in February will be the final 15 megawatt. So total will be 135 megawatt. But they need that we can supply them on a certain occasion for up to 200 megawatt. But that's only once in a while. But the consumption is about 135 megawatt. And then number two, they have invested so much money in GPay. So that's why we believe that, they are very serious, and to complete this project as soon as possible, especially now with the price of copper is even higher than pre-COVID time. The price of gold is, of course, and silver, of course, much higher than the pre-COVID time. And also, I think the government of Indonesia is also very keen to complete this project as soon as possible because that will improve, the value addition and the value chain for the Indonesian government and the Indonesian people, and also for Freeport Indonesia.
Okay, thank you, Pak Haryanto. There's a question now from Pak Yoga from Dhanareksa Securities. On your additional farm allocation, it seems there is transfer from Pertamina to AKR and ExxonMobil. Perhaps can you provide us some color on why government transferred these farm to private sector?
I think the government have seen the volume of AKR has gone up quite significantly. And, even last year, we have consumed more than 95% of our farm allocation. So this year, again, the government see that, AKR will need more farm in order to fulfill our obligation to our customers. So I think that's why the government give us more farm so that we can fulfill our obligation to our customers.
So there's a question from Patrick. Regarding GPay, there is supposed to be a wave of business relocation from China to ASEAN. Are you seeing any evidence of this or inquiries at GPay?
Yes, we have especially a few companies from Taiwan and a few companies from China also that are looking at GPay. But at the moment, I think many of them are waiting for the omnibus law. Because in the omnibus law, there are many benefits that for foreign investors to invest in Indonesia. So we believe that by the end of third quarter or the fourth quarter, it will be much more foreign investment to be realized in Indonesia. But in the third quarter, we believe there is another customer that we hope we can sell between 10 to 15 hectare.
Okay.
We have exhausted questions in the chat box. Is there somebody who would like to raise a question? Please go ahead, raise your hand, or you can directly start.
Aryan, are you still want to ask directly?
Okay. Thank you for the opportunity. Part of my questions has been answered already, but I just wonder if you can share a bit on the upcoming inquiries for GPay land sale. On which sector do you see most inquiries coming from for new land sale? And second of all is that from what I've looked so far in the first half performance, you mentioned that when we look at the petroleum business, we should continue to look at the margin per liter number, and it has been consistently doing well in the first half. Just wondering whether this margin per liter can be sustained for the rest of the year. Those are the two questions from me. Thank you.
Yeah. So I think for GPay, of course, industry are looking at our side, and also logistic company. Yeah. And also some services company are also looking at GPay, to make GPay like the hub for East Indonesia, for East Java and also East Indonesia, because Surabaya is always the hub for Eastern Indonesia. So these are the three industry that we are discussing with. And then second, regarding the price of the petroleum, yes, we still confident that we should be able to more or less maintain our margin in the second half.
Yeah, Salman, can you go to slide number 31, please? So I just want to update you a little bit regarding the developments on the port in GPay. Can you go to the slide which shows the BMS slide, Salman? Next. Yeah. So in terms of this particular project for expansion of the jetty, as you know, BMS, our joint venture with Pelindo, had a jetty of 500 meters length. This jetty is already handling close to about 1.6 million tons. So it's reached more than 85% of its rated capacity. So now we are in the process of expanding this jetty. As you can see in the slide they're being shown, this expansion of jetty is also now underway to add another close to 500 meters of jetty. In addition to building the jetty, we will also add equipment like harbor mobile cranes, grabbers and others, which will also enable BMS port to receive ships of larger size. As you can see in the previous slide, the port is already handling vessels of capacity up to 65,000 deadweight ton. Maybe Salman, can you just move the slide to the previous slide, please? So I think overall, in terms of the project expansion in GPay, not only we are having a good amount of growth in terms of the volumes on the port, but also the expansion will also enable us to receive bigger vessels.
Also, with the 4 crane that we will put in the jetty, when the extension is completed, we will be able to handle also containers. So this will expand the market of customers using our jetty. So not only our complex, but maybe the whole of East Java.
Is there anybody else? Yeah, Felicia Budiman, please go ahead with your question.
Hi, Pak HARYANTO, Pak Suresh. Congrats on the good set of results. I just have quick questions. I think recently government offered like free industrial land bank in Batang, Central Java, 4,000 hectares. So yeah, and then I heard your comments about some inquiries as well. So I'm just wondering whether that will be kind of a competition with GPay, and what will make GPay stands out compared to the free land offered by the government, and also on the 10 to 15 hectares potential land sales in second half. Is it still related with the supply chain of Freeport, or it's an unrelated industry? Thank you.
Okay. Number one, I think it is important that we should not look like a competition between Batang and Jipe, because we both offer a different services or different products. Yeah, because number one, in Batang, only rental. In Jipe, the land is ownership. So this is different. Some factory, yes, they just want to rent, but some factory, they want to own the land in order to give a certainty over a long-term period. Yeah, because if you rent, once the contract expire, you will face with the higher rental. So this is what happened. We have one factory, Aruki, in PT Sier in Surabaya. So when it's up on the 2022, they have increased the rental. So now we are negotiating. Whereas ownership means you own the land, so you don't have to worry about your costs going forward. And then the second thing, I think Jipe have our own port. I think this is what makes Jipe unique and the only industrial park in Indonesia that offer a full integration of deep sea port, of utilities, including electricity, water, wastewater, and even the gas, you know, the fiber optic for the data and communication, and also, you know, the land is readily available and it's an ownership land. So I think, in our opinion, we are a different product. Some customer or some industry may prefer Batang, some may prefer Jipe. So I don't think we are competing. But most important is with different products, Indonesia can attract more foreign investors to come to Indonesia and more domestic investors to invest in Indonesia. I think that is the key and the good thing about all these different products that are available in Indonesia. And then for the second question is what? Can you repeat? I forget your second question. What is the second question, Salman?
The customer for the GPay.
Oh, okay. The customer for the GPay in this 10 to 15 is unrelated to Freeport.
Yeah.
Okay,
We can
thank
take
you.
one or two more questions. If anybody has questions, please raise your hands or please go ahead and ask a question.
Maybe I can add again with Felicia that GPay, the good thing about GPay is the infrastructure is already there. We have already a toll road, and the second toll road will be operational in the end of first quarter next year. You know, the port is already there, and we will be able to handle containers starting at the end of first quarter next year when our expansion is completed. So, you know, a new industrial park, you know, will take time, you know, to build all this infrastructure. Whereas GPay is already there, you know, people can move in tomorrow if they want to. The land is available, the infrastructure is there, the utilities are already there, already built. So, you know, I mean, we offer a different products and a different services compared to the other industrial park.
Yeah, I have a question from Richardson. With the plan of building a power plant for PTFI, how much is the capital needed? And with the current cash level, should we see a higher debt level going forward? Maybe I can answer this question by Richard. So as Haryanto said, this particular negotiation with PTFI for the power plant is based on the idea that it will be, in case a power plant is built, it will be a captive power plant for PTFI, which, you know, the investment and other costs being clearly defined with PTFI, and there would be a clear PPA, a power purchase agreement, which will be entered into, which will ensure that GPay will get a decent return on investment. So as far as the capital requirement is concerned, we will work out based on the requirement of power, but we can fund this either from project financing up to 70 to 80% of the required project size. So it should not affect the cash level of GPay or AKR going forward. Yes, there could be consolidation in case we take a majority in the power plant, but that has not been discussed yet. We will build the power plant only when we have a solid power purchase agreement, which will be a pass-through of various elements and will ensure a decent return on investment for the project. Are there any other questions? I think, Haryanto, I think we don't have any other questions. If you have any final words for the thing.
Yeah, I think for Jakarta Tank Terminal, we are also, we hope by next month we should be able to operate also. And so this will also improve our logistic income. And then very important that despite this COVID-19 recession that may be looming in the world, you know, that some of the industry is facing a slowdown, you know, but AKR, we are always very agile company. We are always looking not on the threat side, but also on the opportunity side, because we always believe there is, if there is a threat, there is always an opportunity. And I think so far we have been able to execute this, and it shows, you know, in our result in the first half. And we believe in the second half, we should be also doing okay to achieve our business plan for this year. And for as for next year, I think with the completion of a Freeport agreement and a few other customers that will go into GPay, will also improve on the GPay income and profitability going forward in 2021. And also number two, I think with the retail side with BP is coming back to, you know, almost pre-COVID, and hopefully in the next few months will be even higher than pre-COVID time. They should also drive our petroleum business. And then also number three is that, you know, our logistic now with the good palm oil business, you know, I think we have a few more inquiry for people to put their CPO into our tanks in both Surabaya and Jakarta. So I think this is also will improve our logistic income going forward. So things are tough, yes. Things are challenging, yes. But our business model is resilient, and it's a proven business model that we should be able to grow in this, even in this difficult time. So thank you for staying with us this morning.
Thank you, Pak Haryanto. I think we have already passed 11 o'clock. So I would like to thank all of you for spending your time with us. When I look at the number of participants, it's almost 70, so it's a very good turnout. If any of you is interested, we can share the presentation. And if you have any comments on the way we presented today, a small discussion on the result and a video plus Q&A. So if you have any sort of your comments or feedback on the way this presentation was conducted, that will be more than welcome for us to improve further. So thank you all of us again, and Salamat Siang to everybody.
Thank you.
Thank you.
Thank you.